Hello and welcome to BQ Prime. A very good morning to all the viewers. Clearly, if you see in terms of markets, the downtake does continue today as well. However, we're trading above the 19,400 levels as we speak. Though Bank Nifty is outperforming the benchmark indices in trade, and that's a scenario which has not been seen over the last couple of trading sessions. However, a lot of movers and shakers that we have been seeing. Overall, stocks like Adani Ports, Titan, Axis Bank, DRL, IndusInd Bank, these are a few of the top gainers today, whereas on the losing end, you have names like LTI, Mindtree, ITC, Divis, Nestle, as well as a Power Grid. But joining us on the show to discuss the movers and shakers in trade today is Pankaj Pandey, Head of Research at ICICI Direct. Pankaj, good morning and welcome to the show.
Hi, good morning. Thanks for having me.
Always a pleasure to speak to you. Pankaj, let's start with the Titan. Clearly, post earnings as well and the festive season just about to start. What's the view that you have in terms of Titan from a valuation perspective, and what would you advise investors to do?
So Titan is one stock which is trading quite rich in terms of valuation. So it's trading at about 57 times FY25 basis. So valuations are definitely on the richer side, but I think that has been the case with Titan for most of the time last year, because what we have seen is that this company has delivered a price performance of say at 26% CAGR in the last 5 years. Top line growth has been phenomenal at about 21 odd percent. Compared to that, the industry would have grown at say 10, 11 odd percent. And despite to sort of increase their market share by 100 bips, they have got a market share of about 7.5% of this of the overall jewelry industry of 4.5 lakh crores. So there is still a lot more headroom for this company to sort of keep growing. I think any kind of a weakness should be used as an opportunity to buy. In case if the stock does correct, although we haven't seen when we sort of look at the last 4 5 years price performance, a meaningful downtick in the stock. Overall expectation remains the same, that it will continue to deliver high teen kind of a growth over the next few years with market share gains. So I think one of the few consumer discretionary stocks which can be held for a longer term from a portfolio perspective.
Moving on, you have shipbuilding companies which have been in focus in yesterday's session as well. In fact, we did speak to the management of Garden Reach, and they've clearly indicated that shipbuilders will get probably almost 1.2 lakh crore worth of orders in the next 3 to 4 years. Last two sessions, good amount of up moves that we've been seeing in all of these names, from a Mazagon dock to a Cochin Shipyard as well as a GRE. How are you looking at the sector, and what would your view be on Cochin as well as Mazagon? Because Mazagon has actually run up quite a bit now.
So yes, Mazagon actually has sort of is up 3 times this year. Cochin is sort of doubled, so relatively it is yet to sort of perform. But coming to stock specifics, see Cochin Shipyard. Now the challenge was that the 70% of their revenues come from the shipbuilding side. That is where the execution was a challenge because of some logistic issues. And that segment got impacted. But going forward, the expectation is that the execution should pick up in the second half, and because largely the supply chain issues have been resolved. And I think they've got an order recently. This year they've got an order of about 9,800 odd crores for next generation missile vessels, which is about 47, 48 odd percent of their overall top line. And good part is that ship repair is a decent, sizable part of their revenue, which is a high margin business. So that business contributes 30% of their margins. They've got an order book of about 21,000 crores, so 9 times their FY23 revenue. So you have ample visibility on the growth side. So I think this is one stock which we have been liking relatively. Now, Mazagon order book is 40,000 odd crore. A good part is that initially there was a concern that the revenue might plateau and from FY25 onwards and may not grow. But I think there are a couple of things which have turned out to be positive. One is that they've got an approval for procurement of an additional 3 Scorpion class submarines. Then there is a project 75I. The overall order size for that is expected to be about 45,000 odd crores. I mean, that was the last or previous expectation. It could be higher even to those levels. So I think the awarding is they're expected to be soon. So, in addition to that, they've got frigates and they've got destroyers. So, from that perspective, this company also the overall revenue visibility has been sort of improving and likely to improve further if we get an approval or if there is awarding for Project 75I happens. I think market is building some of these gains, which I think is probably a bit optimistic at this point in time, given the fact that we haven't seen the order. So we would maintain a sort of a hold rating on the stock.
Right, so that's with regards to where shipbuilding companies go. Moving on, JM Financial is an interesting one to watch out for in today's session. The stock is up over 10%. What's happening with the JM Financial, Pankaj, and what's your view?
So in JM Financial, if you look at for a good period of time, the stock hasn't done much. Now we have a buy rating of the stock with a target price of 9.95. Now, one segment is that on the wholesale lending, so they've been sort of catering largely to the Mumbai market. So one is on the housing side. Our sense is that this segment is sort of picking up. This is 40% of their business. And then I think on the ARC side, we are expecting some bit of a recovery of 12 to 1300 odd crores. And I think, see, the markets have turned buoyant, so 40% of their revenues come from investment banking business, and for which we feel that the second half is going to be sort of robust, given the fact that markets are sort of shaping up well. And I think then the companies have been focusing on the wealth business and the broking business. So these segments have been laggard for a quite period of time, but we are seeing companies sort of building up manpower and digital strength there. So a combination of all that, our sense is that should help the stock to sort of deliver, given the fact that it's been neglected for quite some time.
Moving on, Hudco is another one that has been in focus. What's your view on a Hudco?
So on Hudco, one is when you sort of look at the valuation, so valuations are quite attractive at 0.7 times adjusted book basis. And I think housing, urban housing and overall infra spend is going to be good. Now, this company enjoys AAA rating largely because it's a government-backed entity. Now, the only issue was that last 2 years, we haven't seen much of a growth in advances because of COVID-related challenges. But I think all of that is a thing of past. So, one, I think because of their AAA rating, they'll be able to maintain the steady margins of 3.2 to 3.3%. Asset quality concerns are not there because you're typically lending to government-owned entities. So from that perspective, net NPA is at about 5.5%. So from that perspective, undervalued stock plus expectation of a single-digit kind of a growth overall, double-digit kind of a growth in advances, steady margins, no major challenges on the asset quality side. I think, which is why I feel that the stock also should do well with a target price of 85.
Right, so that's with regards to where Hudco goes. Moving on from the financial space, you do have a view in terms of Shriram Finance. How are you looking at it? The stock has almost rallied in today's session as well, and a lot of bullish commentary coming in from analysts.
Correct. So I think this is one stock. I think post merger we have seen Shriram Finance sort of doing well, largely because now from a very single focused segment of CV financing, especially the used one, the company is diversifying or broadening its growth engine. So overall credit growth is expected to be 14-15 odd percent. See, the used vehicle segment, which contributes the bulk, will grow at 10-11 odd percent. And mind you, CV cycle is also sort of looking good. So from that perspective, no challenges on the existing business side. I think the MSME or the gold or the two-wheeler portfolios where we expect a higher growth of, say, 20-25%. And I think not major challenges we see on the asset quality concern side. And I think the stock is also sort of trading at quite an attractive valuation of 1.3 times adjusted book. We had a previous our target price on the stock is at 22.50. So I think company has been sort of diversifying into right areas. Will be able to sort of maintain steady margins. Along with that, the valuations are attractive compared to peers, which is why we like this stock.
Right. Moving on, Ramkrishna Forgings, the stock has actually hit a 52-week high as well. They have won a contract worth around 145 odd crores. How would you look at this company?
So Ramkrishna Forging has sort of rallied substantially this year. I mean, literally from 250 kind of a levels to 600 plus kind of a levels. Now, this company offers the EV immune portfolio. It benefits from the recovery, what we are seeing in the domestic CV side, plus on the US Class 8 side, and even from the Europe side. Now, company has very well sort of capacitized itself to sort of deliver a turnover of 5,000 odd crores because they've done the capex. Last year turnover was some 3,200 odd crores. Last quarter numbers were also quite okay, steady numbers. So they delivered a bit per ton of some 50,000 odd rupees per ton. Revenues were flat, margins were also sort of largely flattish. Now, they've been sort of winning good orders. So, what they've won is about 145 crore orders, and then prior to that, they had won about 113 crore kind of order for supplying rear axles. So, I think this is one company which is offering EV immune sort of portfolio and sort of doing very well, capacitized very well to sort of deliver higher growth. I think the only challenge is that the stock has run up too fast, so I really do not have a confidence to sort of recommend at these price points.
Right. That's with regards to Ramkrishna taking the price run up into consideration. Uno Minda is another one where they've commissioned 2 new plants for manufacturing of EV components and systems. Now, this is going to be an interesting space to watch out for as well. After the kind of cabinet approval that we've heard yesterday for 10,000 odd buses, you have your ancillary EV companies as well that could be beneficiaries out of it. How are you looking at Uno Minda?
So, Uno Minda is again one company in the auto ancillary space, which typically commands far more higher multiples, largely because of the steady growth it has delivered in the last 4 5 years. They've been sort of a very consistent performer. And they're into all the right segments or what one would sort of look at in an auto ancillary. So one is when you sort of look at, they are into auto switches, they are into horn seats, then they are into alloy wheels. So 54% of the revenues come from the four-wheelers and the balance coming from two-wheelers. Now, overall, they've commissioned new plans, and so they are looking to sort of tap into things like, say, BMS, battery management systems, traction motors or BLDC motors, or onboard, off-board chargers. So there are a number of segments what they're sort of looking at. And I think overall our sense is that some of their high growth segments, so for example, when you look at alloy wheels, there the overall expectation what we have is that business itself can deliver 22% CAGR kind of a growth. In Q4, they had expanded that capacity from 2,95,000 to somewhere about 3,25,000. And also on the lighting side, we are expecting about 18% kind of a CAGR. So this is one company which is offering a growth visibility in all the EV immune products. And given the history of a very capital efficient management of operations in terms of better capital allocation, I think this company continues to sort of do well. Probably it hasn't run up so much. It's up about, I think, 22, 25 odd percent this year. But at the same time, this is trading at a 35 times FY25. So valuation comfort is yet not there. But overall, a very good company from a portfolio perspective if somebody is able to sort of buy in the weakness if it comes.
Right, so that's with regards to Uno Minda. Thank you so much, Pankaj, for joining us on the show and sharing those views as well. So interesting names that we have discussed in trade today. But clearly, if you see from a market perspective, today's session, you are seeing the Bank Nifty, which is outperforming the Nifty in trade, but the pressure does continue. However, being expiry, let's see if the volatility starts creeping in and whether we do see that short covering rally in the last hour of trade, like the way we've been witnessing in the last two trades trading sessions. Overall, in terms of few of the other names, JM Financial is clearly standing out today with a 10.5% up move. Coffee Day is seeing some smart moves. Ashoka, Amber, shipbuilding companies we've already spoken about. Nava is trading under pressure today on the back of the Odisha plant news. Global Spirits is down in trade as well, and this is on the back of the block deal that we've seen. IRFC is trading under pressure, and this is on the back of the news that the government will be looking at offload at an OFS in FY24 as well. So lots of movers and shakers in trade today, and as discussed, and as we've been reiterating, that it is a market for stock specific action. There could be some bit of sector rotation that could start creeping in, but clearly consolidation is what we will continue to see in the markets. That's what analysts are alluding to. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BK Prime.